Now again, our indicator will take nice advantage of those moves, but I want you to know how important those fundamental pieces of news are. Now, on the 30-minute Rubicon, then today, I'm still on the 30-minute, we have this further pullback of the euro as there's weakness there. Then it got choppy in here. I'm going to show you today's action. Let's blow out today. This is the choppy action we had in here as Bernanke was speaking. Up we go. Now, first of all, we go down 90, 100 pips. Then we go up 90 or 100 pips. Then we go down 100 pips. Then we go up 90 pips. Then we go down over 100 pips. I think you get my drift. That's tough. Even though the overall move for the day was about 150 pips, the gyrations within that was profound. So very, very tough to trade. And believe me, if you bring that down to a 5-minute chart, let's take a look at the action on a 5-minute chart. Look at this stuff. You know, that's today's action. Bingo. You know, crazy stuff. Back up again we go. Back down again we go. And then the really crazy one. I was watching this. In fact, I was following a money manager on Twitter who got caught in this one. You know, professional trader. So believe me, even the professional guys can get with this. It's been down for most of the day. You can see it here. Let me show you. Here we go. This is what was happening at the time. On the top end, we've got our trend line to the upside. So we're obviously in this nice downward channel, even though it's spiking dramatically. So it comes down strongly again and breaks the bottom, which most of the traders would have been watching at the 140, 150 level. Breaks through. Thinks we're done. Does a normal retracement. Now let me give you another example of what I mean by this. Let's put the fib on here. So a trader sitting here at this level, okay, watching this thing. It comes down, it sees it at the bottom for the day forming. Nice pullback up to the 23, which is very normal. You know, normal profit taking. And then you expect it to go further at that level. It comes back down. Like, okay, another double bottom. We should test it here. And then it spikes 50, 60 pips in 5 minutes, 10 minutes, bing. That's the stuff that can catch you out. But it also shows you the importance of these Fibonacci levels and to watch out what's going on. Now, if I extend that fib out, and this is the daily, today's fib. Let me change the color of that so we're not confusing it with the hourly fib. Make it orange. Look what happened now. Pull it out. Again, this is a 5-minute chart. Here's her bottom. She slowly drifts up to where? The 23 fib. Even with a new bottom formed, it slowly tends to wind its way back up because at the very least we have profit taking going on here. She got very close to the 41.00 level, the 00. You hear me talk about that all day long, guys. So, you know, it could easily come back and test that. So on this 5-minute chart, and Ken was saying it right there, some awesome trades on the system, on our Rubicon, of course, all the way down here. If I bring it back to the beginning of this, particularly this morning. Bear with me 1 second. Yeah, particularly this morning, guys. Let's take this fib off for a second. I get this. Once she broke the spine over, even though there was some trades, I want to just take this guy here. So it was 14th of July, 2200 hours. So I'm going to check that timing. In Rubicon Indicator, 14th of July, we'll just put in 2200 hours. And just check the action right there. And here's that, that sharp move down. So very nice. Where am I? 5 minute, yeah. Very, very nice trade here. On a 5 minute chart, 25 pip run, beautiful. And then another one down to the next low, another 20 plus pip run, just in a very, very short space of time. Now, which brings me to a hugely important item that I want to bring up, and that is money management. Because you can have the very best system in the world, and if you don't use proper money management, you will get hurt pretty badly. Let me give an example. Then you become a gambler, actually. But even good gamblers, and some of you know some very good professional gamblers, what makes them good actually is that their methodology is to have money management. They have good money management. Now remember something important about gambling. In Vegas or Reno or wherever, the house always has the advantage. Always. So a good gambler is trying to overcome a disadvantage, number one, by using money management. We, on the other hand, in Forex, with a good system, have about a 80% accuracy rate here with the Rubicon Indicator. I think it's better than that, but let's say it's 70-80%. Very much in our favor. I mean, 70% of the time or 80% of the time when we trade, the trades are going in our favor. Where many traders get in trouble is that the 30% of the time that the trades are not going in your favor, they're not using good money management. Or we have no guarantee that the 30% of the time trades are not going our way, that we don't get all those trades in a row. We get 10 losing trades in a row, followed by 100 winning trades, but the 10 losing trades in a row are the ones that will take out an awful lot of amateur, non-professional, retail traders. I mean, put whatever label you want on there. Our goal, guys, is to become professional traders, to think like, behave like, and act like the professional traders do. Now, having said all that, we've talked many times, and certainly the guys in the Traders Edge Forex room, where I coach on Tuesdays, have heard me talk a lot about get your 20 pips and get out for the day. And now, why do I say that? Well, let me clarify. We want to do a couple of things. We want to limit our exposure to the market. And by going for a small number of pips, I'm spending less time in the open market. The open market is a volatile and dangerous place. The other reason is that 20 pips are relatively attainable. Let's use that word. Most traders can get 20 pips in a day. Simple as that. So if we do it in a short space of time and we remove our money from the market, the money is now sitting in our bank. We come back the next day. We give limited exposure to the market. Again, using small lot sizes, never over leverage, guys. Getting our 20 pips a day, and then let the leverage take care of the rest. Now, I want to show you something. This is kind of a little bit boring maybe on the money management, but guys, this is critical stuff. This is a return, an ROI, simple analysis using an Excel spreadsheet. If I have a deposit of $10,000, and I look for only 20 pips per day, that means one lot is $1. I will only trade one lot per $1,000. So I have $10,000. My goal is 20 pips a day. I will only trade one lot per $1,000. One mini. And one pip, one mini equals $1. Everybody with me? That means on day one, with a $10,000 account, I will make $200. That's 20 pips, trading one mini per $1,000, which allows me to trade one standard lot because my initial deposit is 10 grand. Hopefully everybody's following me. I make $200. The second day, now I'm up, I make another two. This will be 400, 600, 800, and so on. Now, when I get up to 20,000, I'll be trading 2 standard lots because my goal is to trade 1 mini lot per 1,000 or 1 standard lot per 10,000. So at the 20,000 margin, I'm now trading 2 standard lots. And so it begins to grow exponentially. But simply growing at the rate of only getting 20 pips a day, only trading 1 mini per $1,000 that you have in your account. Based on a $10,000 account, at the end of 6 months, you have in excess of $100,000 in your trading account. Now, let's take it one step further and show the power of compounding and leverage and really make this thing mind-blowing. At the end of the second 6 months or 1 year, you have in excess of $1.1 million in your trading account. That's starting out with $10,000 and trading only 20 pips a day. I hope you guys can grasp where I'm going here, because this is really, really significant. Now, is that realistic for most traders? No. Is it achievable? Absolutely yes. Then why would I say for most traders it's not realistic? I'll tell you why. Because most traders here, trading 1 standard lot, not a problem. 2 standard lots, no problem. 3 standard, fine. 4, little edgy. 5, 6, getting nervous. 7 to 10, extremely agitated, worried, and nervous. Trading 10 standard lots at a pop. Right? So if 1 standard lot is equal to $10, 10 standard lots is equal to $100 per pip. Per 1 pip, it's equal to $100. As you move on down, what happens down here? 15, 20, 30, 50 standard lots at a pop. That's the only thing that will stop this from working, is because truthfully and realistically, most traders psychologically will not be able to handle these levels of trading. Now, the market allows you to do that because there are ECN brokers out there and big institutional brokers that can handle those levels. But most of us will never get there. Having said that, maybe most of us don't need to. If you want to, it's there. But maybe most traders would be very comfortable at this level here, making $50,000, $100,000, $150,000, $200,000 a year. Doable. Very doable. As long as we do the following. Do not get greedy. Get your 20 pips a day. Get into the market. Be very precise. And back to what we talked about all the time. Accuracy. Looking for optimal, highest probability trades only. If you do the drill down that I just went through, if you draw your Fibonacci's, pay attention to fundamentals, you know what's going on in this market, and you pick your entries. And we said, go with the overall trend if at all possible. The best trades are the first 1 and 2 that are given to you through Rubicon, ideally on the 30-minute. And if you're working with the trend, you can drop to the 15. But the ideal trades are on the 30. Look at yesterday's trades going up here. The very first trade on the 30-minute with the overall big trend gets you 60 pips. You are done for the... Not only are you done for the day, you now have insurance money in the bank as well. Because we're looking for 20, so we take the extra 40, put it in the bank on a shelf for insurance for the day that it doesn't work out. So if we have a bad day and we lose 20 or 30 pips, we're still on our train because we have in the bank a little reserve to cover those bad days. Hopefully I'm making sense here, guys. This is the critical stuff. Now, I've thrown out a lot of stuff, so I want to please, by all means, start asking questions. Looks like Adrian is still having problems with the sound. It's got to be on your end, Adrian, because everybody else seems okay. I think he's left. What he'll do is he'll come back and check it out on the blog. As you're writing questions, let me do the following.